Hi folks, Lee Gettess here with the Market Sense for the week of November 17th, 2015. We are going to stare into some charts that come from the Trade Navigator software. And looking at a weekly bond market chart here, bonds had a recovery last week, and this week is, a little confusing. The red line here is 152, well, let's call it 30. They poked a little below that today, but it's possible that that could actually act as support, send them up to the middle moving average, which is around 154.18. That would make perfectly good sense. I actually thought support was probably going to be closer to 152 this week, and it still might be. And it's possible that they could go all the way up to the mid 156 area in the upper moving average here. They might have been beat down a little too far anyway. I know the Fed's going to raise interest rates, but this is the last time the Fed was going to raise interest rates back down here in the middle of the chart, and you see what happened there. So I don't place a lot of stock in that, and they're getting buffeted by some out of the market type stuff, which we'll talk about a little bit in stocks. So I don't know. 152 looks like support. Resistance could be all the way up at 156 and a half, but we'll look at the 154.18 area first. Kind of interesting how things play out this week. And again, we're going to talk about that a little more here in the S&P. They broke down hard last week and were much lower Sunday night and then staged a major recovery. Now, obviously, this is because of developments in the Paris situation, which has absolutely nothing to do with the market, but certainly creates a climate of fear. It looked like they should, after this weakness last week, it looked like they should go down to the 1985 area perhaps. Obviously, they've been nowhere near that. They should have held around 2040, 2042 here if they were going to continue down, and they seem to be comfortably above that. That leaves the next target here, the middle moving average, around 2068, and that might be some pretty tough resistance right in there. If they get smoking, though, resistance is all the way up to 2100 here, and I wouldn't be surprised at all if they get excited to see them go to new highs. The problem you have in trying to analyze this is, okay, the Paris situation is a problem, and it upsets people. It's not surprising to have snapback reactions and then fear hit the market again. But it may not be over. I mean, we had a soccer game in Germany against Netherlands, canceled suddenly because of a bomb threat. The more this stuff happens, the more unsettled markets become. Markets just hate uncertainty. And if they think all of this is under control and just nonsense, they could very well rally, but it's very difficult to control risk, because as long as there is things that make them nervous occurring, and they seem to be occurring fairly regularly overseas, you could get a pretty big downdraft. And again, support for this week could have been 1985, so there's plenty of room for them to drop if they get nervous without actually damaging anything. So very difficult environment to know what to do, because again, you can't just analyze technical analysis. The markets are being buffeted by something that has nothing really to do with the markets. So that's what we've got for you today. I'd like to think there's some way you can find something profitable to do. Thanks for checking in to see what we're thinking.